Hey, what's up, folks? Thanks for joining us on today's Trading Rebellion show. I'm joined by Nick Mancini from Trade the Chain. We got CJ and Monty, senior crypto analyst from MarketRebellion.com. Today is going to be a lively show. One, because I can tell you CJ's fired up in the early hours. You're going to get some alpha today as well because Monty's going to drop some bombs later on as well. And then you're going to get a mix of news that is driving us all irate lately. You all know what it is, but it seems like every day the cycle keeps pumping out some new, fresh material. So we're going to get to all that. Also, don't forget tonight, as it happens on Sundays, Tuesdays, and Thursdays, Revolution Radio, Twitter Spaces, 5:30 p.m. Eastern Time. It's myself, it's Mark Lopresti, it's John Nigerian. Nick hops on there every once in a while when CJ and Monty aren't ordering fast food. Hopefully they can get on. But we have a lot of good people. We just had Tom Lee on the last episode, which was really cool. But handle on Twitter at GetRevRadio, 5:30 Eastern Time live. Not going to brag. We get a hell of a lot of viewers too.
That's literally bragging, but okay.
I won't say numbers, but 150,000 tuned in last week. All right, guys, let's go to the overall markets real quick before I unleash the boys on you. We got 1.1 trillion total market cap, about flat for the last 24 hours. Bitcoin sitting at 26.4, again, flat, as well as Ethereum. And we see neutral sentiment on the Trade the Chain dashboards. I can tell you this is the most boring dashboard I've seen in a long time. Absolutely nothing happening. But we go over, and by the way, check out the volume, 28.6 billion traded on the day, extremely light. On the boards, we're mixed green and red for the day because it's so damn even. We're falling asleep. And here we go to Bitcoin. Turn over the pillow and find the cool side. Don't get out of bed for this one. 13 billion switching hands today. Low volume. Sentiment in the green. Price is holding around that 26.4, but people were more happy when it was 27. So anyway, none of that. Enough of that nonsense. We're going to kick it right into the overview of the markets, both TradFi and crypto, with Nick Mancini. Sir.
Let's do it. So what I've got pulled up right now before we dig into some of the other fun stuff is just is the Bitcoin chart. Love my lines. But the critical thing I wanted to point out is the possible deviation at 26.5 yet again. If I go ahead and zoom out on the 4-hour, it'll be a little bit more clear with these deviations down here. And it does look like this deviation is wanting to form. Obviously did get above the 26.5 level, but quickly cracked lower during yesterday's session and now trying to curl back up again. So watch this level very closely for price action into next week. Remember, we have FOMC next week. So if we were just flat around this level, that could be a catalyst for lower or higher, depending on what the hike or lack thereof is. But I'll be watching 26.5 very closely, as a lot of alts have been bleeding lately. And if we can reclaim this, it may inspire some confidence in the market. But one thing we have seen, and if we don't really use CVD, cumulative volume delta on a long-term time frame, but you can see the blue is in spot, red is in perps. So synthetics, and it's just been continuous spot selling with some action in between. But right now this doesn't look extremely inspiring, but if we can hold above 26.5, maybe we get some spot buying in. So why has there been a lot of spot selling? Well, it is obviously in relation to Gary Gensler, bringing lawsuits against both Binance and Coinbase on the heels of several lawsuits against many other crypto exchanges. But there's been some pseudo good news, I guess. No one really wants to see the U.S. regulators getting their dress pulled off or come out of the closet, whatever you want to call it. But it does seem that Gary Gensler has some sort of relationship with Binance that he did not disclose publicly. Of course, just an allegation. But this is pretty serious, considering he may have to recuse himself if it is proven to be true. And it obviously could get in a bunch of different legal means as to whether or not Gary Gensler is, attacking Binance for retaliation or whether it's a legitimate lawsuit. So fascinating development there. There's another update as of this morning. Genslers accused of being in complete contempt of Congress by a Democratic lawmaker out of New York. So that's fascinating. This is not a Republican saying this. This is the Democrat. So this is a new development, but interesting to see people on the left aligning with some of those on the right. Another situation, Gary Gensler got community noted by Twitter, basically calling him out and saying, his actions were not exactly as he claims them to be. You can definitely go ahead and look this up. It's on his tweet from June 6th. So if you don't have time to read the screenshot, you can go find his tweet and the notes. But recently, Coinbase has had to sue the SEC to attempt to get simple clarity over the issues that this tweet alleges Coinbase is guilty of. So fascinating to see the news cycle also start to be assistive to crypto. And then another one, Robinhood joins Coinbase and saying it tried to come in and register. So 16 months Robinhood spent trying to register with the SEC. At the end of that 16 months, the SEC said this will not be possible. It's exactly what they told Coinbase. Then they turned around and sued Coinbase after letting them obviously have an S1 and IPO filing. So fascinating.
And let's not forget Kraken. It happened
exactly.
to Kraken too. Before the
Kraken paid what, 30 million, Alex?
Yeah.
So we're adding on to the collective sparring with the SEC. We don't know if Robinhood's going to join forces with Coinbase or Binance or whatever, but definitely not a good sign for the SEC's lawsuit. And then yesterday evening, fascinating because this is much more impactful than that Democratic lawmaker that I mentioned before. But Yellen supports U.S. regulatory oversight over crypto to protect consumers and investors. Additional crypto regulation would be appropriate. We will work with Congress to see additional legislation pass. This does not agree with what Gary Gensler is doing right now. And it's fascinating to see the top brass of the left side of the aisle come out in a 24 hours, multiple people seemingly in support of the crypto industry and not so much in support of the way Gary Gensler is going about enforcement by regulations, or regulation by enforcement, I should say. So sorry to take a couple extra minutes there, but that's a lot of news after getting hit with the Binance Coinbase lawsuit. So I thought, the crypto community definitely a little bit more positive today than earlier in the week.
Yeah, Gensler's a poser for sure. I think this is the topic of discussion on everything. We spoke about this, Nick, on B3 on Tuesday. I did a segment on the street.com yesterday speaking about this. This is beginning to just be a boring run-on subject at this point. By the way, how much Bitcoin do you think Janet Yellen owns?
Probably she's Satoshi. I have no doubt.
Oh, okay. Do you think she uses a Trezor or a ledger?
She's the type to write that down on a piece of paper and slip it under the mattress, I think.
I like it. All right, Yellen Nakamoto. CJ, let's let's go over to Monty real quick. I want to get to the making money part of this segment. He's promising alpha. He's very confident today, so.
Well, I'm always confident. I'm always confident, Alex. But real quick before I dive into things, if you want to talk about alpha, take a look at this. Talk about unusual. So someone opened up. So this is from the 6th. So on the 5th, someone opened up coin positions, $107,000 worth of coin puts that they bought, and then. The lawsuit happened and that position went up nearly 2,500%. So, Gensler can dump on crypto all he wants, but I think he has some housekeeping to do because clearly someone in his office knew that this lawsuit was coming.
Nancy Pelosi, sorry.
But someone clearly front running this, and to even talk about crypto while you have insider trading going on a crypto-based company that you are like overseeing it's laughable. This whole thing is laughable to me.
Hold on a second. What's interesting about this is that right before when a suit before it's brought against somebody from the SEC is never shared. It's not shared out of the SEC. So lawmakers wouldn't know about this unless, and I don't know the rules, if one of them's out, if there's a House Financial Committee, if there's some sort of committee that is privy or reviews these lawsuits before they go out, which I don't know if there is, but I don't know how this leak got out, because they're not supposed to report it at all.
Right. And that's a big problem. So, he's talking about, all these sanctions in crypto. Well, how about you worry about keeping your own house in order first, and then worry about, emerging asset classes. But anyways, let's move on to some actual alpha. I wanted to start with NVIDIA because I went on a bit of a tirade last week about NVIDIA. And what I was talking about was how it was massively, massively overvalued relative to the rest of the assets within the queues. The whole AI narrative, obviously, is the main cause for it. But this, to me, is kind of like the first red flag in the kind of narrative fading. It actually kind of looks like a red flag. The irony is that, from a technical analysis standpoint, this would technically be a bullish pennant, but that this is a red flag. When you see a company that sells an actual product jumping in the top 5 of overall market cap in the world, this was a huge red flag to me. And although this is, a technical formation, that's not my point. My point is that this plausibly is the needle that pops the bubble and, flipped a lot of people from being bearish to being bullish. And I think that's what we saw in some of the big tech names. So like if you take a look at Microsoft or Apple, or I think the best example is probably Meta. Look at how we ended last week with, kind of not breaking into new highs, but breaking out of this critical level. And traders just went ahead and bought the weekly expirations, out of the money calls that expired in a week. And these 3 days of stagnation are enough to kill those options and make them worthless. So then you have this big bearish engulfing candle. So it doesn't necessarily mean that this is the top, right? Because today we're bouncing back, showing some relatively decent signs of positive price action. And if people are flipping bullish, which I kind of believe they do, I kind of believe they are, then I think that, taking on that contrarian perspective that we talked so much about, I think now might be, or not now, but perhaps after, next week's CPI print, or, the next CPI print, considering going short in some of these assets will be kind of the play to make. That being said, in the meantime, I still think we could plausibly see assets like Meta grind higher here as traders who are trying to short the top continue to get shaken out. Same is true for things like NVIDIA. I think people, are going to try and short this one, try and play this gap fill. And as a result, it could plausibly grind a bit higher. But, Nick, one thing that we always talk about is, there are a few metrics that I put more credence on than, positioning and volume. And, with NVIDIA, clearly although this is, diminishing bearish volume, the volume just has not been the same since that earnings day. I don't think this stays a top 5, let alone top 10 company for much longer. And this pulling back will be enough to, finally bring the Qs down. And coincidentally, I think it's going to occur right as the majority of traders finally flip from bearish to bullish. So I know CJ had an interesting chart about trader sentiment. If you wouldn't mind throwing that up real quick.
Yeah, I have a few red flags in addition to your red flag pennants. I think I'm sharing. All right, this is a preview of the Barron's article that's going to be published this weekend. Don't fear the bull market. Why stocks are heading higher. Thank you for telling us this now that NVIDIA is up 200%. Apple is up, is gone straight up for the past 3 months.
Is that an NFT? Is that an NFT on the cover?
It should be. I mean, that cover, there's a very good chance that cover goes down in history as marking close to the top near some of these assets. Here's another one. So check out mainstream pundits. The market will see smooth sailing through July 4th. And most notably, you can look at all of these different, headlines and TV shows. You get a sense for the positioning and people starting to flip bullish because they've been forced to capitulate on their shorts. Look at that shift between last week and this week in terms of people who are bullish. It didn't double, but it went up from, 29% all the way to 44%. This has been one of the largest sentiment shifts intra-week since probably the start of the entire year. So this is a very important sentiment shift. I know that the AAII survey is imperfect. However, when you see such a massive shift in an intra-week basis, then I think that's something very important to pay attention to. Additionally, this is what Monty was mentioning earlier. I got to give credit to the market wizard Shapiro for this idea, but it's something that I've been following very closely. Almost seems too poetic if the stock market tops on a weak CPI next week after bottoming on a strong CPI in December. This is the whole concept of narrative failure that we talk about so often. When a trade gets crowded, usually the best time to have a contrarian entry is on a news failure event like that. So let's say we get a weaker CPI print, price gaps up next week, and then closes red. I will short probably the market and various stocks, and I'll put my stop loss right at the top of that day's high. Because theoretically, if I'm right, or if we're right on that short entry, price should not go higher than the day that the weak CPI number was printed. So I think that we're lining up for a very interesting week next week. And I'm stunned almost. I shouldn't be, but I'm stunned by the amount of people who have just been so perma-bearish on these mainstream media networks for the past 3 months and have just been wrong. Now they're flipping bullish. Give me a break, man. I got to fade this.
Yeah, I know.
Thank you, Kramer. Thank you.
And yeah, that last chart you shared, CJ, that sentiment chart was the one I was referring to. I mean, that is a shocking shift in sentiment. And it coincides with those pundits changing their perspective as well. So when you have that happening, that to me is multiple red flags. And then a stock like NVIDIA rising like it did on the back of the AI narrative, which is now also fading. You have it's almost like the perfect storm, I think, next week for some overwhelmingly negative price action, because pundits are flipping positive. Sentiment is flipping positive. People are going to start to try and capitalize on all the gains they've missed in the last 6 months by buying calls, and they're going to get blown out. That's what we've seen historically. That's what we saw at the bottom. So why would we see anything different at the top, right? I think what we see next week will be very much like what we saw in October when the market was making a bottom, just the inverse of that.
Yeah, another thing that I'd like to add is the equity put call ratio is at 0.5 to 0.6, which is very historically low, meaning people are buying a lot of calls relative to the amount of puts that they're buying, and they're being forced to cover. Now, a point that I want to make, and I know we talked about sharing alpha lately. Please don't go out and get max short after what we've just said over the past. This is why it's so important to wait for that news catalyst, because the market inevitably it's still going up for the time being, and just because people are getting bullish doesn't mean that the market can't continue to go up temporarily. It might even, right? However, once you have that defined risk with the narrative failure, that's where I really like to go and be more aggressive. An example of this in gold, we were talking about this. Think about all the people who were searching on Google Trends for how to buy gold and de-dollarization near the gold peak. It was staggering. And then really the news catalyst for me for that gold trade was like, you look at, we had a weak CPI print. Theoretically, gold should go up and close higher if the trend is truly bullish. It went up, closed down, and that was the indication to become short. And I mean, gold, if you just look at the chart, has gone much lower since. So I cannot stress the importance of waiting for that catalyst and that news failure event. Otherwise, you can kind of just get blown out unless you manage risk. So just wanted to put that forth after we've been so bearish, or at least just pointing out the bullishness of the pundits.
Peter Schiff even bailed on gold. He's NFTs now. I mean, I think that's
didn't he do a Bitcoin ordinal NFT?
Oh yeah. Literally, I remember that episode where you were on the episode of B3. I think I was floating all day before doing the show, and literally in front of Peter Schiff's house, waiting to get a comment.
He must have had a dangerous schmelting incident to have to go to the Bitcoin ordinals.
His account got hacked too. His Twitter account.
That happened. It's happened to a lot. The Franklin Bored Ape guy got hacked. I think Wrecked Proof got hacked as well. He had like 150K followers. So yeah, I would just sidebar. Update your Twitter security because it's definitely more prevalent than it was before.
Do not get hacked.
Who gave this man a soundboard? Nick, was that you? Oh,
it's the official sound of 2023 so far.
I think that was it.
That was basically it. All right. So, where do you think? Let's talk short and midterm, guys. Where do we think the equity markets are looking for? Second half of 2023, and let's talk about crypto for just the summer snapshot. What are your predictions?
You can take this one, Monty. I mean, otherwise we can jump into specific trades and stuff.
Yeah, no problem. So for equity markets, my prediction is essentially kind of what CJ was laying out there for us next week, in which we see a narrative failure where we actually have a strong CPI print and yet the market closes down. That would be indicative to me of, a narrative failure. And that's where, that's what happened in October when we were making a bottom. And I think plausibly could be the same catalyst as we make a top here in June. So I do think we're approaching a market top here in the immediate interim. Now, as for Bitcoin as well, although we've seen a lack of the correlation to the upside with, all these stocks rallying and Bitcoin doing essentially nothing, I think that what we're going to see now is an increase in that correlation or a return of that correlation in terms of price action to the downside. So if we see the Qs drop hard, don't think that because Bitcoin's correlation with equities has been relatively weak over the last couple of months, don't think that correlation's gone away. The negative correlation will still exist. We've seen it time and time again. And also you have, Eastern indices looking relatively fragile as well. The Nikkei is pulling back after what had been a very strong run. So all of these things are kind of lining up for in the immediate short term, some bearish price action for Bitcoin. So I'm looking to the downside. One, position that we saw some decent price action last night in some of the altcoins on the back of some positive price action in the Hang Seng index. But I think that overall, many of the positions that we laid out last week, the kind of ones that are going to fly under the radar, things like Uniswap, SushiSwap, I'm still short those, and we'll continue to ride them short into the summer because I think that we have a long and grueling crypto summer. So, cue the sad sound effect.
Sorry. Okay, interesting. CJ, are you going to agree? Oh, sorry, Nick. Go ahead.
CJ can take it if he wants.
You sure? This might go on for a while.
I'll follow up. We'll all get our time, so no worries there.
No, I'm only kidding. Yeah, I mean, I think we got two clear narrative failures potentially going forth. Predictions. I hate to always make predictions because they usually age poorly, but as of today, what it appears is that you've got these two potential narrative failures coming out. One with CPI, and then secondly, which I think would be the ultimate catalyst, is if there's a pause in the rate hiking cycle, or you just don't see rates go up any higher because everybody, that's been everybody's sign to get bullish. And once it happens, it's probably going to be the top. I mean, obviously we have to wait for price action to see, but I want to talk about specific opportunities that I'm looking at right now. Think I should be sharing now. Let me know if you guys got this.
Yep.
So a couple things that have been going up based on COT data and positioning. You're beginning to see the short squeeze in copper come to fruition. Now, I'm not trading this one particularly, but I think that, what's going on in copper is you're seeing a short squeeze of these shorts that were building up. You can see retail in yellow were virtually giving up on their longs throughout this downtrend. Copper has been a pretty good indication of economic health because it shows a reflection of demand within industrials. So I think if you see this continuing to go up, pundits may point to it saying, this is a sign that the economy is recovering. However, the way I see it is that, sure, it might be, but as of now, it looks like nothing more than just a short squeeze. So something to watch there in terms of crowded positioning. Also, something that I took today, now that we're starting to see weakness in the dollar as well as the Nikkei, is Japanese yen. So you can see what I look for is to have this level reach 100. That's an indication of a lot of crowded shorts. And as you can see, this thing's gone straight down for quite some time. And, you have retail and large speculators continuing to short this thing. So what it means to me is that yen doesn't have to go up just because the market's crowded with shorts. But if it does, it's going to probably spike and short squeeze like copper. Another good example of what we've seen, where we've seen this, has been in soybeans this week. I mean, that is a hell of a short squeeze, and the beans are moving. So that's potentially what we could see out of Japanese yen if we go on a short squeeze. And so I've entered, kind of a position there. I really like to have risk defined and to put my stop right below that level in case we run it. But this bullish engulfing candle today looks pretty promising. Like Monty said, we got the Nikkei beginning to look a little toppy. And I'm looking for reversion back to that moving average, kind of similar to the move in soybeans that we saw. That's pretty interesting. The other thing that's interesting is fixed income, because this, if we look at COT data, has started to get crowded once again. So let's look at ZN. And we were once again at that 100 level. The only thing that's stopping me from getting in this trade is you can see retail is long. So I'm not going to follow retail into that particular trade, even though it could work. So yen is really where I'm focused. And then it'll be interesting to see the positioning in soybeans, because that's been an interesting trade. But overall, I think, the dollar trade and the gold trade, you're starting to see some rotation. And I think an interesting place to play it is Japanese yen, based on how many shorts are in the market right now and the potential of capturing the losses on a short squeeze. So I guess that's what I'm looking at. In terms of Bitcoin, it's tough because of what Monty was basically laying out earlier. I mean, we have a lot of people being bearish Bitcoin. I know, Nick, you shared a Vox article with me today. Let me bring that up real quick.
Your response made me laugh too.
Yeah, I mean, I'm a big Tim Dillon fan, so. And that was such a great, here we go. Now might be a good time to consider quitting crypto. I remember the exact same thing that they were saying right after FTX. The only difference now is that equities were actually going up back then, which was so disappointing of a trade because crypto probably would have gone up if it weren't for FTX. But this time around, I don't know if we're going to be able to have enough to escape a negative equity correlation if equities start going down. So that's one thing making me hesitant in terms of crypto. But I do think there are interesting opportunities. And, if we see a rotation in that dollar trade, yen could be an interesting target. So I've taken that one and could be wrong. I'm wrong a lot, but I think the risk reward is pretty good there.
All right, guys, let's do this. I think I'm having some microphone problems, so I apologize if there's any noise coming around. But we're going to shorten up today's show real quick. I appreciate everything. Nick, do you have any closing remarks?
Yeah, I have a slight contrarian take, and it's rooted in needing to see more data. So I totally agree with Monty and CJ as we stand right now. The one thing that I'm watching really closely on this Bitcoin charts is the 1 week 200 moving average. And I really like the action that we've seen above the estimated 200 moving average here. It's a lot of wicking action, rejecting off of these highs from back in February. So if this continues to hold into the summer, now I do recognize the current weakness and it's likely to try and tag that level and test it in a few ways. But if we hold that, then I'm probably going to flip into some bearish or to some bullish bias because two tags here ended up with it flipping it, and if it holds it, then I think it's got a really good chance to continue higher. And then the only other thing on equities is, this isn't rooted in any sort of chart, but I do agree that if Forbes is telling you the bull market's coming, then definitely take a grain of salt and some serious skepticism. But when you think about it, even with the upcoming recessionary conditions, a lot of people are soft landing right now, and I do kind of believe it. And if you think about equities earnings, I mean, how are equities going to trade? Well, it's going to be off forward guidance and whether or not they can hit that forward guidance. Forward guidance has been pretty solid. Like there's been very few companies saying we are going to expect a major downturn. I think the home improvement sector was the only sector to really say we're expecting some bad news due to the fact that nobody can frickin' afford a house. And that's another problem that could lead into bearish equities later down the road. But I think just for the short term, I don't see a huge equities collapse just due to the fact of earnings are still killing it. This AI craze is probably going to release some added operational power in the near future, which could then translate to cost savings, which increases profit margins, et cetera, et cetera. So not ready to say we're down and out yet, but I'm watching very closely to our current levels and how we react to this upcoming CPI FOMC. And I think next week, we're going to have a really fun conversation after we've digested all of the data. We get FOMC, we get some minutes, and then we're really able to understand, oh my gosh, did the sky just fall or are equities still standing tall? And if they are, then we have to really think about, a bullish trajectory into Q3.
I agree. I think I get it. You guys are still getting used to the sound effects. That's cool. All right. It's not as bad as Kramer.
I like them.
Yeah, you're using them well. Timed perfectly. So
that's
yeah,
DJ.
Alex is a DJ at a few clubs and on the island on the weekend. DJ Soldano or Cardanzo. Which
Cardanzo.
One is
DJ Cardanzo. All right, folks. Thanks for joining us today. Sorry we're a little shorter than usual. We're just giving you back a little bit of your hour here. As always, CPI sounds like it's going to be the important, cornerstone into what happens over the next few months.
FOMC next week too.
I know. I was just getting to that. FOMC. A lot of people saying, going to pause the rate. I'm still saying it's going up 25 basis points. We'll see what happens. Yeah. Let's hang on to those handlebars. We got your back. We're gonna be here next Monday, and guide you through it. So thanks a lot, folks, and take it easy.